Thank you for listening to this episode of Lending Thoughts, sponsored by Rocket Pro. Today, I'm joined again by my friend and colleague, Chris Colasanti, the Vice President of Rocket Pro, as well as Data and Analytics here at Rocket Mortgage Canada. Chris and I are going to talk about some of the lessons learned from our journey, so you're not going to want to miss that. We talk about culture, of course, because we can't help ourselves. And we talk about the importance of people carrying the torch forward on this innovative journey for mortgage and fintech and finance in Canada. So thank you very much for listening in. Chris, thanks for joining me today.
It's my pleasure.
The only two-time guest of the Lending Thoughts podcast. And you want to know why?
Why, Bekim?
Because your first episode with me was the most listened to episode in the history of Lending Thoughts.
I'm not surprised.
No?
I'm not at all surprised.
But you are humble.
I'm very humble. Listen to the podcast. The only podcast I've listened to, actually, was just mine. Well, I had to boost the numbers. So, yeah, here we are.
Incredible. I'll let the others know you said that. So appreciate you joining. And I want to have a healthy discussion with you about Rocket Mortgage Canada. I also want to have a healthy discussion about the state of the mortgage market, and who knows where it evolves into. Maybe some conversation about the macro side of things. Frankly, unscripted. We're going to kind of take it in whatever direction it goes. But I definitely want to start with what I think is important. We're obviously coming to a wind down phase of our business here in Canada. And that comes with a lot of questions about what we're going to do next. We'll save some of those. But I think the important thing is trying to capture the lessons at the end of the day. I think that it is only a loss or it is only failure if you do not learn. Right. I think the John C. Maxwell quote is sometimes you win, sometimes you learn. Mm-hmm. I think that, well, in the end, you cannot definitively say we won. I can definitively say that we learned a lot, and I want to try to capture some of those things. Is that okay with you?
100%.
All right, beautiful. So maybe let's start with there. What have you learned about mortgages in Canada?
Well, Bekim, I knew nothing about mortgages when I started 5.5 years ago with this business. And I have learned that mortgages are very difficult. The mortgage industry is extremely difficult, and that's not to turn anyone off from it. It's just to say the truth, which is that in business school, first thing you learn in Business 101 is this concept of Porter's 5 forces. And there are these 5 forces that act on every industry, things like the threat of new entrants, the buyer power, supplier power. And when there is a lot of those forces acting on the industry, it's typically less attractive. And so we often think about, a quintessential business example is airlines. Airlines are not really an attractive industry to go into because all of the forces are very strong. And so it makes it really difficult to compete. And, in our experience with Rocket Mortgage Canada, I've come to appreciate it's a tough business. You have to be extremely resilient. You have to have a lot of grit, and you have to love what you do. And it's so funny because all the folks that you've had on this podcast, the folks that we interact with on a regular basis, they're weirdly obsessed with mortgages. You rarely run across someone in the mortgage industry that casually does mortgages, right? You've got realtors that are in and out of the market. They're kind of like part-timers.
Yeah.
Not a lot of those in the mortgage industry. The folks that do it, it's this weird sort of mortgage cult in Canada.
Yeah.
It's just obsessed with mortgages, and a lot of amazing people, but it's really, really difficult. It's difficult to create change, and it's difficult to innovate. And there's a lot of, I think, things we'll get into, structural reasons, cultural reasons, that just make it a really tough business to do.
Maybe we jump into those structural reasons.
Yeah.
What do you think makes it hard? Because you've used the word difficult quite a lot here, and I would wholeheartedly agree with you, but you almost say it with a bit of excitement. And to your point, everyone that we've ever talked to on the podcast and everybody that you and I interact with on a daily basis, they are more than willing to tell you how difficult it is, but also super excited to get up every day and continue to go at it. But what are some of those difficulties?
So I think certainly one of the difficulties structurally in Canada is competition, right? As we know, oligopolistic. There's 6 really big players. They control 90%, 95% of the assets in Canada. And so it's sort of that David Goliath story. It makes it really difficult to compete with. One thing we'll probably touch on at some point is just those differences between the American market and the Canadian market. But in Canada specifically, competition is one, access to capital, right? The big six control, the majority of the capital. And it makes it, relatively difficult to compete when your competitors also have all of the money. Another structural issue is just regulatory. There's a lot of regulatory things that make it, I think, advantageous for incumbents. The banks have, some regulation that makes it, advantageous for them to do uninsured lending and a handful of other things. It makes it tough for startups. Compliance, right? There's a lot of compliance regulation in Canadian mortgage market that makes it really tough for new entrants, and just the general speed at which policy and regulation moves in Canada, it's very glacial. And so it hasn't necessarily caught up with open banking and fintech and just, I think the things that we see moving more rapidly in other countries. But I'm curious, you were in the US, you came over to Canada. What are some of the structural issues that you've observed in Canada that are, maybe not present or different in the US?
That's a great question. I think two things come to mind out of the gate. Number one is technology, and number two is a difference in unit economics. I'll speak to technology first, which is to say that in the US, despite these being a lot of different individual technology companies running these stacks, there are a few players in the US who, through their own business or through empowering mortgage brokers, have figured out a way to tie these different functions together, like mortgage brokers, like the point of sale system that the mortgage broker uses, like the loan operating system that is being used to underwrite and ultimately go on to fund these mortgages, to the closing of mortgages through the title companies and things like that. Whereas in Canada, it feels very disjointed. And it's a lot harder to tie these pieces of technology together. And a consequence of that is it's a lot harder to deliver a great client experience. And I think people feel that as consumers. I know that was one of the things that was really inspiring to me when we first started this company. Is I had gone through my own mortgage in Canada, and I knew what it was like over on the US side because I lived over there, and it just could not be more different in the way that it felt going through the process. The lack of certainty, the lack of transparency, the lack of the ability to do things digitally. It was very, very frustrating. So when we started this and started building on that, it was exciting that we would make headway there. And I believe that we did. I know that we did, but I still think there's a lot of room for improvement. And I think it comes from folks moving together in the same direction. And some of it comes from advancements in regulation. Some of it comes through advancements in capital and the willingness to invest. But I think, you can't just say, you better invest in this. You need to show where the capital returns come from in order to make it investable, right? So I think that technology is a big piece. And the second thing that makes it hard to invest in is the capital side, the unit economics of a Canadian mortgage, and compared to a US mortgage. What I'll say there is that, on average, let's say as a broker, you're making 100 basis points on a loan in Canada. In the US, on average, you're making about 200 basis points as a broker on a loan. As a lender in Canada, you're making 130 to 150 basis points on average in total for the transaction. As a lender in the United States, you're making 340, 350 basis points. You could see there are significant differences there. And what that creates ultimately is a massive scaling issue. So you as an individual may be able to start up your own mortgage brokerage and make a little bit of money after, collecting your 100-ish basis points on a mortgage. That's fine. You as a lender might be able to run a small operation and be able to collect a little bit of money on margin. The hard part is when you try to really put the pedal to the metal and scale that business significantly. The significant gain on sale margin in the US allows you to reinvest that capital back into the business and grow that rather quickly. In Canada, it's just not there. So it's not to say that you can't grow. It's just that you need to pick one of two paths. Either A, you need to be capital abundant and capital patient to wait for that return, or you need to be capital abundant and super aggressive. And you just have to accept that that is going to be a trade-off in order to consistently reinvest. And I think there's some players, taking that approach right now in Canada. And I think there's some players that have been around for a long time, and we've seen them, grow over the course of 15, 20, 25 years. You got to effectively pick a lane, but you can't necessarily produce the cash flows to just pour back in reinvestment into the business and grow it rather fast. That's a major difference between the US and Canada that I've personally observed.
Yeah. To state simply, in the US, you can be, contribution margin positive on that first transaction.
Correct.
In Canada, it's very difficult, and most sort of run at that break-even point. And so from a scaling perspective, the capital intensity is much greater on the Canadian side as a result of that. Now, the lifetime values, probably very similar. Like CLV is very similar between the two. Some would argue it's possibly higher in Canada.
Yeah, over
because
10
of the
years,
annuity
15
model and then the retention rates. And so that is obviously the advantage. At the end of the day, you need very patient capital to be able to grow in Canada quickly, or like you said, you need to go for that slow organic growth over 30 years or something like that.
Right.
Yeah.
And I think we have that. I mean, you look at the likes of a First National or an MCAP or a CMLS, now part of Nesto. Like those were, slow, deliberate builds.
Just grow AUM every year.
Right.
Slow and deliberately. You add in servicing. You add in all those sort of other things to increase the top line revenue. Even at their size, their MUA really pales in comparison to the big six still.
Sure.
Yeah.
I mean, I saw a stat that the entirety of the AUM from the credit unions in Canada combined don't equal that of National Bank, who's number 6 on the list of the big six, as you mentioned. Right. So I think that goes to show
the scale. Yeah.
The scale of the big
significant the big banks are and how much of AUM that they control. And, another thing to touch on, cover the unit economics, the competition side, and then of course there's the cultural side of things, which is Canadians are generally more risk averse than Americans.
Factual.
And, Americans, it's built into them. You've got the American dream, big, bold bets. They took on Britain. Like it's just in them. It's like, it's in them from the very start.
Yeah.
And Canadians more so value stability.
Yes.
Incrementalism. In some aspects, that has been helpful. You look at 2007, 2008, Canada was less impacted by the global financial crash, and even to the extent of 2001, the dot-com crash, less impacted, and less Canadians own stock than Americans do as well, right? We are a more risk averse culture, and that lends to big oligopolistic organizations. So I think there's both that structural and cultural sort of behaviors that have led to the environment that we have. Yeah. And as well that you mentioned, like the venture capitalism, even the behaviors of venture capitalism in Canada, the environment is just, there's far less VC money in Canada.
I mean, venture capitalists in Canada typically want an unfair advantage and they want to hit on 1 out of 3.
Yeah.
In the US, the idealism around venture capital is you're hitting on 1 out of 10 if you're really good, and like more likely 1 out of 100, but it's just an outsized return on the 1 out of 100. And the 1 out of 100 is a 10,000x return to offset some of the loss. It's a different mindset. My question that I would ask you, Chris, around that, which I think you're nailing quite well, is do we need to change? Because there is an argument to be had that, hey, like we talk about the US booming. I mean, look at the GDP numbers right now, right? Like the US up over 20% in GDP per capita, which is effectively a measure of productivity of the entire economy over the last 10 years. Canada, disparaging stats, somewhere between negative 1.5% to maybe 0.5% gain over a 10-year period. So inflation's going up in every way. Your dollar is effectively, worth less. House prices have certainly risen, right? Like we're feeling it. We're feeling it at the grocery store. We're feeling it everywhere. But we're not producing more as a society. So maybe I'm framing that too much. But my question is like, will that playbook of protectionism and stability versus the US playbook of boom and bust, if you will, can we keep playing this game?
I think that's a great question. And, it's certainly a global question. It's not just Canada that is experiencing that problem, right? It's Britain, it's Australia, it's other countries that have, I think, similar values that are also going through this problem. It is a global problem for the most part. And many countries are sitting there thinking, like, how do we recreate the success of all of these unicorn companies, all of these tech giants?
I think tech is important, not to jump in
for sure.
and cut you off there, but if you look at the returns of the S&P 500, it's driven by a handful of technology companies.
Magnificent Seven.
Exactly. If you look at the GDP growth in the United States, like it's driven by not too many technology companies that are pushing the ball forward. That cannot be said. I mean, outside of Shopify.
Yeah, Shopify, and then it's like the banks that basically are the largest companies in Canada, whereas the largest companies in the US are their tech or their chip producers.
Yep.
I mean, Tesla's an auto manufacturer, but also very much in many ways a technology company. And so, do we need to change was the question. I think very much so. I mean, we can't have another 10 years. You think of like, we basically lost a decade.
Yeah.
The farther we fall behind, where is talent going to go? Is talent going to stay here, or are they going to go to places that are growing and that are innovating? Where is money going to go? Right. And so obviously there's change that needs to be made. And I think it does come down to a lot to the culture of the country and what it is that we value, because you can value stability to an almost detrimental level, which is, I think, what is happening. And when you talk about like risk mitigation, sometimes there is a appropriate amount of risk. And I always use this example of a grocery store, right? A grocery store can have zero theft. They can lose $0 to theft if they hire 2 security guards that stand at the entrance and the exit and they pat every single person in and out of the entryways. There's no way for a store to lose money on theft. Is that the appropriate amount of theft or loss for that business? Probably not, right? There's some level of theft that is just acceptable and for the whole better, right? And so I think the problem is there's such an aversion to risk that it's become detrimental, and it's slowed everything down. Like our slowness to implement things like open banking, our slowness to implement things like, employment verification through the CRA, like just like very basic things that have been proven in other countries.
Digital signatures. Like it took COVID for anyone to accept digital signatures in the banking world, which is crazy. And so you almost need like pandemic level events to drive any form of regulatory or behavioral changes in the country. And there just needs to be a greater acceptance and a greater tolerance to risk and a greater comfortability around failure and allowing businesses to fail. We as a society value social security so much, right? Yes.
And again, from the last podcast, you and I talked a lot about philosophy. Friedrich Nietzsche has a quote, which is sympathy for all results in tyranny for thee. At some point, you are going to stifle the innovation, the creativity, the productivity of a country if you are so worried about saving absolutely everyone.
So let me piggyback off that a little bit into the mortgage space right now. And people will say like, well, why can't a company with super deep pockets just enter the Canadian space today and stand up a lender and just do a better job lending money than the people that exist? Like you're saying, hey, like the banks, they own all the market share when it comes to the lending. Well, if somebody else had $1 billion and they wanted to lend out, a couple $100 million of mortgages annually or something like that, there's insured, there's uninsured. Why can't they just take their money and deploy it in really uninsured where the rubber meets the road? Can you maybe speak to that?
So obviously the majority of mortgages are uninsured, so 80 something percent. You're independently wealthy. So you've got,
Is that so?
That's correct. You've got, hundreds of millions of dollars, and you are looking at investing. You're looking at standing up a bank or a lender in Canada, and you're looking at doing so in the United States. And so you think, okay, well, it costs somewhere around $50 to $100 million, most likely, to stand up a bank or a lender in Canada. Subsequently, it's going to cost, depending on the state, somewhere around $10 to $15 million to form that same company in the US. So right off the bat, your capital requirements just to become a bank or to get a charter, it's substantially more. In Canada, over the last couple years, I think 10 years, we've issued a handful of bank charters. The US has issued hundreds.
I think it's like one in the last 10 years.
One, yeah. The US, they're like Tic Tacs, not really, but there's literally hundreds that have been issued in the same time period. So right off the bat, it takes more money. It's far more difficult to get because there's a limited quantity that they issue. And then second to that, there is this sort of unfair advantage that especially in uninsured mortgages that these big six have, where the amount of money that they have to set aside when they lend these uninsured mortgages is substantially less than the amount of money that you would have to set aside if you were lending in the uninsured
To
space.
be clear, default risk, capital,
the cost of risk, exactly. Yeah, the cost of risk is much higher.
So if you're setting aside more money that you're not earning as great a return on,
that's right,
then that dramatically affects your margin. And if it just offsets your margin by 30 basis points, 50 basis points, that's a margin that you can't pass back in price, i.e. you can't give a better rate.
Yeah.
Therefore, you cannot match the rate that a Schedule I bank is willing to offer on that mortgage because they just have better access to capital than you do, period.
Yeah.
It's structural. You can't beat it. And here's the trouble. These things are typically buried on page 396 of some regulatory framework.
Subsection B.
So exactly. The average person in the mortgage industry doesn't understand this, right? Let alone trying to explain this to the consumer such that they would like get up in arms, be like, you know why you can't get a better rate on your mortgage? Because someone 15 years ago made this requirement and it gave them a regulatory moat around their business model at the disadvantage to the consumer. And sorry, Mr. and Mrs. Client, that's just the way it has to be forever now. And that's a lot of what I think is beneath the surface of our industry. It's not that people don't want to innovate. I think, yeah, some of it is cultural. I think that Canada has a lot of work to do there. I mean, I've talked to a lot of people in the industry. There are a lot of forward thinkers. They're excited. They want change. I mean, the people who run mortgage companies primarily are dreamers who want to change. A lot of the consumers that actually get involved in and around this stuff, they want to see change. They want to see innovation. Trying to even get everyone around the same table to come together and understand what the problem is even difficult as a starting place. Would you agree?
100%. And Musk has become a relatively controversial, person today. But, early days of Tesla, when he was super obsessed about making this very simple, very beautiful vehicle, he didn't want to include like the safety disclosure that they forced them to put on the dashboard or something like that.
The visor.
Yeah.
Yeah. The warning
labels on the visor. Yeah. And he was like, well, that's dumb. Why is that there? It doesn't do anything. But at some point, someone in the government decided that that was a necessity. And he was like, I'm just not going to do it. Right. And people would be like, well, you have to do it. It's like, why do I have to do it? And who said I have to do it? And he just continuously asks why. And you need people like that. And eventually it's changed. Similarly, I think, if you think back, the original iPhone up into, I don't know which one, let's say 7 or 8 or something, on the back, it would have the recycling information. And it was hideous. And Steve Jobs hated it. He hated it. Like, why do I have to put how to recycle this device in symbols that no one really understands what they are?
Right.
But someone at some point said that you have to do it. And even getting that to change was years.
Sure.
It took years and so many conversations just to change something that simple. And that's in the US where things do move, although they move slow, relative to Canada, they move pretty quick. Sure. I think from a government perspective, especially from a banking or financial regulation perspective in Canada, stuff just moves so slowly. We are any people that are just going to, make the change, just do it and maybe get their hand slapped, or just a bigger, more voices at the table to say like, hey, it's become too difficult or too ridiculous to originate, mortgages, and we need to do something about it. I don't know what the solution is to that. I'm curious if you got any ideas.
I think it's just about carrying the torch forward. If you study history and you were to study the way that empires fall and ultimately regimes get toppled, it's historically not one major event. It is usually a series of events. And oftentimes these things don't even happen in a single person's lifetime. Like, the reason why this mission for me feels so dear is because I've been doing it for, going on 13 years now in the finance industry, and was pushing the ball forward in the United States, came over here over 5 years in Canada now of being in the mortgage business. I've lived in Canada for well over a decade. And I've always just figured that I am one person in a massive mission, right? And the mission is to make home ownership more accessible to consumers And I know that in order to do that, you need to remove fear, you need to remove uncertainty, you need to improve the experience. You need to have hard conversations about what it takes to unlock home ownership as a reality for a lot of people. So it's bigger than just the next mortgage, and it's bigger than just me. So it's working with people like you, and then ultimately, growing the team that we had in Canada to over 100 people. And it was so infectious the way that every single person on our team got around the idealism of home ownership being accessible to Canadians. And look, we existed in a time when homes were rising. Like at one point, 2020 to 21, like homes were rising like 30% year over year. It was insane.
Mm-hmm.
And younger people were just getting more desperate and disparaged by the day. They're thinking like, there's no possibility that I can possibly own a home at some point. But if it's not us, then who?
Mm-hmm.
Right? And that's the way that I think about it. Like if there aren't a group of people who care, who will take the torch, run with it, and then if they ultimately have their light blown out, that somebody else goes and relights that torch and continues pushing forward. That is what society needs. I don't think I would have been able to do that over the last 5+ years, knowing how challenging this market is, without a whole team of people around me picking me up when things got really hard. That said, I do want to talk about the power of a team a little bit, because I think one thing we did incredibly well over 5 years at Rocket Mortgage Canada is build great culture. I mean, when I think about my journey here, at no point was there a single day even. There was no Sunday scaries where I was sitting on my couch on a Sunday night dreading the week ahead. I never circled the block when I pulled up to the office. I typically would drive very fast with a smile on my face to the office every single day, because I just want to be around the people. I want to feel the energy. I want to be a part of the mission. It felt so clear. What are some things that you observed that created that, so we can maybe touch on the team a little bit?
Yeah, I think one of the main things that sort of garnered everyone and pushed everyone in the same direction was we were all convinced that we were going to be number one, right?
Yeah.
And we fought and we played with the intensity that we were going to win. I'm a competitive person. You're a competitive person. If you get a bunch of competitive people together, all they want to do is win, right? And we're not playing for second or fourth or fifth place, like I think I've observed, some are doing, or that complacency sort of sets in after a little while. You've got a lifestyle business, it's making some money. We were always sort of gunning for winning, whatever that looks like, on day one.
Yep.
And so that was exciting. And then just working with A players, people that enjoyed not only working with one another, spending time with one another, they enjoyed joking around and just like having a good time at work, but they were also incredibly intense when it was necessary. It was just fun. It was such an enjoyable place to show up every single day. I was in Chatham, about an hour away from the office. I was still driving in, on a regular basis, not because I had to, but because I wanted to. And I wanted to feel the energy. It was energizing to be here. And that is, of course, the result of the culture and the people that we had, very intentionally brought in to the business. And everyone that walked in the office felt it. All of our lending partners, our legal partners, everyone that walked in there were like, oh, wow, this feels different.
Yeah.
And that was definitely a source of pride, I think, for us as well. We started the conversation talking about learnings, and I think the greatest learning in all of it was the importance of the culture. And it's that thing that you hear in business school. You got to pay attention to the culture, but no one actually knows what it looks like.
No one can define it.
No one can define it. No one really tells you the actions to take, to create this culture. It really just has to be set and defined by that founding team.
Yeah.
And then continuously reinforced with behavior. And you have the saying, I won't take it. I'll let you talk about, the culture piece. You've got an equation for it, I think.
Well, it's actually not for me. It's from Danny Meyer. It's my favorite quote around it. The restaurateur. I don't think Danny Meyer would appreciate that, but your culture is the sum of the behaviors that you celebrate minus the behaviors that you tolerate. I always try to figure out a formulaic way to explain how it is and how that gets created. But ultimately, that's just it. It's what gets recognized inside of your culture and what is simply not tolerated. And I mean, nobody wants to run around being the bad person who's saying, hey, that's not tolerated here, but somebody has to be.
For sure.
Truthfully. Like, you have to protect it. In the beginning, that could be a little bit uncomfortable for people when you go around and say, hey, that's not how we do things here. And maybe it's like, you don't like the way they took care of a client.
Mm-hmm.
Hey, I listened to that call, and that's just not the way that we take care of our clients. That's unacceptable. People will go, wow, I never got that kind of feedback before. And it could be subtle, but guess what? They're either going to fix it or they're just not going to be a part of it anymore.
The reward piece, I think most people understand and, do an okay job with.
Everyone loves great jobs.
Yeah, rewarding the right behavior, but it's the tolerance of intolerable behavior that people, I think, struggle with. And like you said, like, no one wants to be that person. If you have an internal policy to respond to emails quickly, and several days has passed, no one wants to be that person that replies all and says, hey,
can I get an update on this?
Yeah. If it's happening multiple times, you do have to, at times, sort of publicly intolerate that behavior, or people, they won't learn. It's the same as Pavlov's dogs. It's like there's negative reinforcement, there's positive reinforcement. It requires both. I don't think you can just reward your way to a really good culture.
No, there's something to be said for the stick.
Yeah.
There's something to be said for the stick. There's something to be said for, replying all that email and say, hey, still waiting on you. And that tells the other, 12 people on that email thread that, okay, like, when they're asking for something and 3 days has gone by, clearly there's some internal clock going with them. They want to let you know that 3 days was not the answer that they were looking for, that they were probably looking for something faster than that. And then you're just kind of like training it into the culture. That's why culture is not what you say. It's not even what you write down. It's what you do. It's how you act. It's really the founding team, et cetera, that are like setting that for the whole organization as it gets built out. They're not listening to what you say. They're watching what you do. Right. So I often will say the fact that, like, hey, if you want your team to be on time, be on time. Mm-hmm. The second you start showing up late, your team will show up late. Mm-hmm. And I think one thing that we're just highly intentional about from the very beginning was we made our culture fun, but we made it very clear what we were trying to achieve and what it was going to take to get to where we were going. And that we were okay if, I think it was Frances Hinojosa who, I had on the show and love what she said, was like, if I need to put you in a canoe and just kind of like give you a little nudge to help you swim up the stream because you can't stay here anymore, that's okay. Mm-hmm. Right? I'm going to put you down the river a bit. And like, that's great for you. You're going to land just fine and you're going to do great in your little canoe. But I need you to paddle off because this isn't the place for you. And we were really, really protective of that. But I think that if anybody, were to sit here with us reflecting, they would say that although it is painful to build culture that way, it's the right thing. And the A players start to like really show through that process. And the people who care the most, they're just so passionate about the way that which we protect it, the way that which we approach the mission ultimately, and have fun with each other. I think most importantly, it's like business is hard enough, life is hard enough, but if you're going to spend 40 to 50% of your waking hours at a job, then you better be working with people that you like, and you better be feeling like part of something bigger than yourself, right?
Especially in this industry where it's so difficult. The problem is so complex and it's so difficult.
Yes.
And to just constantly chip away and try things, and, one thing doesn't work, you try another thing, it doesn't work. If you aren't surrounded by people that you enjoy, people that are like there to kind of like laugh it off, but then also encourage you to continue to push along, we would never have gotten, a tenth of as far.
We've never gotten out of the starting block.
No.
Because you quickly realize how hard it is. You start digging into the data and you realize that, the first contact rate or the answer rate of a client is 30% higher if you call within the first 5 minutes as opposed to within the first hour, right? So it's like, well, how do I now go out and build a system in which we call every client in the first 5 minutes? And then you're like, okay, that's pretty good, but what happens if we call a client in the first 5 seconds after they submit a lead application to us? Oh, that makes us even that more hard to compete with and makes our system that much better and increases our conversion rate. And then you go out and, I think at the beginning, you're trying to get 10% better month over month. And then you're building on that and you're trying to get 1% better. Then you're trying to get 1% better every day, 0.1% better. You're like, after so long, you've gotten so refined, you're like playing down to the decimals. of constant improvement. That's a really, really, really hard thing to do, to wake up every morning and try to like consistently just chip away to improve your business. We never lost that spirit and excitement up until the last day. And what excites me about our team, as I think about it, the culture that was built, culture is loosely used, but what it means beyond just like the way that people interact with each other, it's the excitement they show about the work itself, the mission itself. They will take that and they will go and apply that across the mortgage industry. And I think about that torch again, as I mentioned, those people will carry this Rocket Mortgage Canada torch across Canada and otherwise perhaps globally.
Mm-hmm.
And they will continue to push for innovation inside of the places that they're at or starting their own.
And there will be, I think, really interesting ripple effects of, people that were on the team, very talented. Everyone is sort of going to different homes now in different places in the industry. And I think you'll see a ton of these ripple effects of those sort of Rocket Mortgage Canada team members that are looking for inches and obsessing about finding a better way inside of these other Canadian businesses. And I think continuing to root for the smaller guys and pushing for just a better experience for Canadians.
Yeah.
And I root for, the Wealth Simples of the world and, Pine and Nesto and some of these other, new age mortgage companies.
Sure.
They're continuing. They're going to continue to challenge. And I want to bring up the I Love Mortgage Brokering Facebook chat. So for those people that don't know, there's sort of an I Love Mortgage Brokering group where a lot of mortgage brokers are there. And there was definitely an outpouring of support, but there's also the opposing side that was sort of, they were talking about, oh, I expected this. I saw this one coming about the conversation around the wind down with Rocket Mortgage Canada. And it's like, let's not root for entrepreneurial companies that are trying to innovate and trying to make things better and creating more competition in the marketplace. Like, we should be all rooting for that.
100%.
And anyone rooting against that, I don't know. Who are they rooting for then?
They are rooting for the protectionism of what they think is their business built over time and a threat to their business, but they couldn't be more wrong.
Mm-hmm.
They couldn't be more wrong. There's enough mortgages in this country to have a robust system, and there's certainly a lot of space for innovators. And I love what you said about rooting for others. All those companies and many more companies like them, rooting for every single one of them to continue pushing. Because Chris, you, me, our team, we know how hard it is to be in the arena. We know how hard it is to be entrepreneurial. We know how hard it is to innovate in a space that is structurally designed to hold back innovators. And to anyone who is going to continue to carry that torch, ourselves included, because we're far from done, you best believe that, I seriously wish them well. And I root for them. And I really don't pay much attention to the haters, if you will. Those people will always feel that way. I really just try to focus on the people who are wishing the best for other human beings. I think about humans first and foremost, and we're humans, our team are humans, and ultimately they're going to want to do some incredible things. And I think the industry should be thankful that people are bold enough, brave enough to put themselves out there, get into the arena, fight the battle, and try to make this thing better every single day for people, ultimately.
Yeah, 100%. With that, is there anything you want to say to the folks that have supported the business, your fans?
Fans, I wouldn't say that, but yeah, just thank you. It's been an incredible, incredible journey. I mean, just the fact that you and I are even sitting here talking right now on a podcast called Lending Thoughts. A couple of years ago, I told you I wanted to do this. Took some time to put it together. I kept putting it off. And then one day I was like, let's just get it done. Let's just make it happen. And in a matter of no time, basically was able to string this together. Just that attitude from me to you to every other person in the company, like that's a culture, that is an attitude, that is a mindset that exists in our people. And I cannot thank everybody enough, from the people inside of the walls of Rocket Mortgage Canada to the people outside of the walls who helped us and supported us every single step of the way. We're excited about what we're doing. Just keep pushing, because it's going to take great people. So thank you for everything that you've done, but please, please, please don't stop.
Boomski.
Thank you.